I'm Jeff Saylor, and welcome to this edition of Financial Reporting Considerations, a series designed to keep you up to date on current events in accounting and reporting. In this edition, we'll answer the question that many of you may be pondering: how do I account for this PPP loan? Before we get into the accounting, let's briefly go over what this is all about. You see, Congress set up the PPP, the Paycheck Protection Program, as part of the coronavirus aid relief. And specifically, it was designed to help small businesses with the negative impact that the COVID-19 virus was having on their business operations. And so this authorized the SBA, the Small Business Administration, to fund small business loans up to $10 million per borrower for qualifying entities. Now, these funds could be used to cover payroll, mortgage interest, rent, utilities. In other words, they were designed to help keep the doors open. Now, a key element of this loan is that if criteria has been met, the loan will actually be forgiven. That is, you don't even have to pay it back because you did what you were supposed to do. And because of that, when you think about it, the nature of it, it kind of turns into a government grant. And so that brings us to the accounting. What do I do with this thing? I have clients who have gotten this loan. How do I show it? Well, now this certainly looks like a loan because it is a loan. But it's one that has a good chance of being forgiven partially or even in its entirety. And clearly this has never been addressed specifically by the FASB because who would have ever seen this coming? So today, the AICPA chose to address this topic in Technical Question and Answer 3200-18. Now here's the specific question. How should a non-governmental entity account for a forgivable loan received under the Small Business Administration Paycheck Protection Program, or PPP? Now note, we are talking about non-governmental entities here, and that will include not only businesses, but not-for-profits as well. Now, in its legal form, this is clearly debt. We really can't argue that point. But in substance, it could be a government grant. Now, stepping back, the SEC has actually indicated that they have no problem with it being accounted for under ASC 470 debt, that's your FASB codification dealing with debt, or under the IAS, the International Accounting Standards, number 20, accounting for government grants. So basically they've given the green light that, hey, we can see how it could fall in either category. Now, the default position that the AICPA is looking at here is to follow ASC 470, debt. And that's regardless of whether you expect to repay it or not. So if you expect to repay it or you expect to have it forgiven, the AICPA has said, hey, we're fine with you following the FASB 470 dealing with debt. So if we're going to call it debt, what are we going to do? Well, first we record it as a liability. That makes sense. And then we'll accrue interest under ASC 835-30. Now, we're not going to impute additional interest to get it up to the market rate, even though for most of you this loan is way below the market rate, because it says that rates prescribed by government agencies are excluded from the scope of imputing interest, and that's already in the FASB codification. So now it's on the books. Now I want to derecognize it. It stays on the books as a liability until one of two things happens. A, it's legally released in portion or whole, or it gets paid off. Wow, had to think real hard about that. Now, once the criteria of one of those two things has been met, you reduce the liability by the amount forgiven or paid, but let's talk about forgiveness. And then for that forgiveness part, guess what we've got? we've got a gain on the extinguishment. So for those of you that get this loan forgiven, who choose to put it on as a liability under 405, once you've met your criteria, you simply make the liability go away and you've got a gain going on there. Now, let's say you actually expect to meet the requirement, and so therefore in your mind it's a grant. Now, there's two paths we have to follow here: business or not-for-profit, and they are different. Let's talk about a business entity first. Now, you could analogize this to IAS 20. Now, under this concept, the loan would remain a liability until it is probable that the conditions will be met and that assistance will be received. So if it's probable you're going to be able to do that and meet the conditions and that you'll actually get the money, both those have to be met. At that point, now we will look at a change. And once that's been met, we will reduce the liability and then use it systematically over the periods related to the use of the funds. You see, it is related to payroll, rent, and such. So it starts out as a liability, and at the point we meet the conditions, it snaps and becomes a deferred revenue, and then it moves into the income statement as it gets used up. Now, they point out there's two ways to account for this in the income statement. You can simply call it other income. Do not call it a revenue. We all know better than that. Or we could reduce the related expenses, okay? My payroll is not this, it's been reduced. Why? Because it was covered by a grant. I don't have rent, it got reduced because it was covered by a grant. Either one of those is fine. Now, that was dealing with a business entity. What about a not-for-profit? They say certainly you can follow ASC 405. No problem there whatsoever. But if it chooses not to follow 405, not call it regular debt, and they expect the loan to be forgiven, then you follow the not-for-profit guidance found in 958-605, Conditional Contributions. Basically, that liability remains a liability until the condition, that is, you've met the criteria for forgiveness, has been met, at which point you've met the condition and now it is in fact a contribution to the not-for-profit. So you can go with either one of those. Now, parting thoughts on this. Certainly for any entity reporting where the issue is considered material, you will want to make proper disclosures adequate for the users to understand your handling of the issue. So there you go, in a nutshell, how you can handle those PPP loans on your financial statements. I certainly hope that you found this information helpful and that you, your family, and friends stay healthy and happy in these difficult times. Thanks for watching.